All right, let's dive right in today. We're tackling the Bank of Canada's latest interest rate decision.
Definitely a big one. And of course, we got to look at what's happening with inflation and try to make sense of what it all means.
Yeah, for the economy as a whole, but also for like our own wallets.
Exactly. What does it mean for us regular folks?
Okay, so right off the bat, the Bank of Canada just did something pretty interesting.
Yeah, they did.
They lowered the policy interest rate again.
For the fourth time since June, even, this time by 50 basis points, bringing it down to 3.75%.
See, that's what I don't get. Inflation is finally back on target like they wanted. The bank's own report says CPI inflation dropped from 2.7% in June all the way to 1.6% in September. And they're saying it'll probably hang around that 2% target for a while. So why lower rates now? Doesn't that seem a little, I don't know.
Counterintuitive.
Yeah.
Well, it's important to remember that the Bank of Canada isn't just focused on inflation. They've also got to think about economic growth and keeping people employed,
That's
right?
true.
And those are sending some mixed signals right now.
Yeah, the report does say growth has been around 2% for the first half of the year. Not terrible?
Decent, but not amazing.
Exactly.
And if you look at the job market, it's a bit, well, not as strong as we'd like. Unemployment's sitting at 6.5%.
And hiring has been kind of slow.
Especially for certain groups, young people and newcomers, they're having a tough time.
The report actually says they account for like 3/4 of that increase in unemployment. That's rough. Why is that happening?
I think part of it is just that overall hiring has slowed down. When the economy isn't growing as fast, businesses get a little nervous about hiring more people.
Makes sense.
And unfortunately, when that happens, it's often newcomers and young people who have the hardest time finding work.
Because they're just getting started and don't have as much experience.
Right. They're entering a job market where everyone's fighting for those fewer available positions. So yeah, it's kind of a double whammy for them. Fewer jobs overall, and D, they're facing tougher competition.
Okay, so this rate cut, is that the Bank of Canada trying to like jumpstart things?
Exactly. It's a tool they can use to give the economy a little boost. The idea is that if borrowing money becomes cheaper, it encourages businesses to invest and people to spend more freely. And hopefully that leads to more growth.
But doesn't lowering rates also risk making inflation worse?
It definitely could. It's a bit of a balancing act, right?
It's walking a tightrope.
Exactly. They're trying to find that sweet spot where they can support growth without letting inflation get out of control. They're definitely aware of that risk.
The report really emphasizes how closely they're watching consumer and business behavior. What exactly are they looking for? Like, how will they know if this rate cut is actually doing what they want it to do?
Well, they're looking at things like how much people are spending, whether businesses are investing, and of course, keeping a very close eye on inflation itself, analyzing all that data, looking for trends, trying to anticipate how it's all going to play out.
So it's not just about what they do, it's about how we all react to it.
You got it. Businesses, consumers, investors. We're all part of this giant economic system. And how we react to what the Bank of Canada does actually influences what happens next.
So it's kind of like we're all in this big economic dance together.
That's a great way to put it.
All right, so we've got this seemingly contradictory situation, right? Inflation is cooling down, interest rates are going down, but at the same time, there were worries about slow growth and a job market that isn't as strong as it could be.
Yeah, it's complicated. And that's exactly why these decisions the Bank of Canada makes are never simple. They have to weigh so many factors, try to predict what's going to happen, and ultimately try to guide the economy toward a place that's good for everyone.
A lot of responsibility.
No kidding.
Okay, so we've got that overall picture now, but there are some more specific things in the bank's report that caught my eye that I want to dig into a little deeper.
Let's do it. One thing I thought was really interesting was how they talked about prices, like how prices for different things change at different speeds. They even had a name for it.
Oh yeah, the ripple effect, right.
Yeah.
It makes sense, though. I mean, gas prices seem like they change every day, but other things, like my insurance rates, they only change like once a year.
Exactly. And that makes it super hard for the Bank of Canada to do its job right. How do you predict and control inflation when some prices are going up and down all the time while others are pretty much staying the same?
Yeah, that's got to be a nightmare for them.
Think about it. If something happens and oil prices suddenly go way up, you'll see that right away at the gas pump. The price goes up like that day. But for a lot of other stuff, it takes way longer for those price changes to actually hit consumers.
It's kind of like you're trying to steer a ship through a storm, but the waves are coming from every direction at once.
Perfect analogy. The bank has to keep track of all those different speeds and try to figure out how they're going to impact inflation over time. It's complicated.
That's why they focus so much on core inflation, right?
Yeah.
The kind that doesn't include things like energy and food prices,
Yeah.
because those are the ones that tend to jump around all the time.
Exactly. It gives them a better idea of what's really going on with inflation underneath all that volatility.
Okay, that makes sense. So another thing the report talked about was the global economic situation. We can't forget that what happens in other countries can have a big impact here in Canada.
It's definitely not. We're all connected. What did you think about their outlook?
Were they optimistic? Worried?
Well, their overall prediction is that the global economy will keep growing over the next couple of years, maybe around 3%. That's pretty much what they were saying before. But there are some interesting differences depending on where you look.
Like what?
Well, they think the U.S. economy is going to grow faster than they originally thought.
And that's usually good for Canada, right?
Yeah, because when the U.S. economy is strong, they buy more of our stuff.
More exports for us.
Right. But then you look at other parts of the world, and it's not quite as rosy.
Yeah.
Growth in China has been a bit sluggish, and there are worries about those trade tensions we keep hearing about. And Europe has been dealing with slower growth too, although the bank thinks that'll pick up a bit next year.
So it's a mixed bag globally.
Yeah.
How does that uncertainty affect what the Bank of Canada does here? I mean, they're already trying to walk that tightrope between controlling inflation and boosting growth.
It definitely adds another layer of difficulty, because if the global economy takes a downturn, it could throw everything off balance.
So they're watching things closely, but basically admitting they don't have a crystal ball.
Exactly. There are just too many factors they can't control.
Now, there's this thing they keep mentioning in the report, excess supply. To be honest, I'm not really sure what that means. Can you explain it in simple terms?
Sure. Think of it this way. When there's excess supply, it means we're able to make more stuff than people actually want to buy. It's like having a factory that could be working at full speed, but there aren't enough orders coming in to keep it busy.
Oh, so it's like too much supply and not enough demand.
Exactly. And when that happens, it can cause prices to drop, which could lead to lower inflation or even deflation, which is where prices actually go down. And that's something the Bank of Canada really wants to avoid.
Right, because deflation can be bad for the economy. People stop spending, businesses don't invest, and it can turn into a vicious cycle.
That's the worry. So that's another reason why the Bank of Canada is lowering interest rates to try to encourage people to spend more. They're hoping that'll help balance things out.
Okay, I get it. But the report also says that even though overall spending is going up, when you look at it per person, it's actually declining.
Right. It's a little strange when you first see it.
Does that mean people are just being careful with their money, even with inflation cooling down and interest rates dropping?
It seems like it, yeah. Total spending might be increasing, but when you factor in how much the population is growing, the amount each person is spending is actually going down.
So what's going on? Are people just not feeling it, economically speaking?
It's probably a combination of things. We
Well.
did have those interest rate hikes last year, so some people might still be feeling the effects of that, like their mortgage payments went up or their credit card interest is higher. Plus, there's just a general sense of uncertainty in the air, you know? Even if things aren't terrible right now, people might be a little nervous about what's coming next.
So it's kind of like everyone's waiting to see what happens before they make any big decisions.
Exactly. Holding back a little, seeing how things play out. And that actually leads into another interesting point from the report, what they're predicting for the housing market.
Okay, this I got to hear. What are they saying?
Well, get this. They actually think residential investment is going to pick up in the next few years. Like more people buying houses, more construction, that kind of thing.
Really? But haven't mortgage rates been going up?
They have, but the bank thinks other factors are going to outweigh that. They're talking about things like interest rates going back down, pent-up demand, like people who've been waiting to buy a house finally jumping in, and those recent changes to the mortgage insurance rules.
Oh yeah, the ones that are supposed to make it easier for some people to qualify for a mortgage.
Right. So even though mortgage rates have been going up, they still think there's room for the housing market to grow.
So they're bullish on housing, even though a lot of people are worried about affordability.
It seems that way, yeah. They do acknowledge that some people are going to face higher costs when they have to renew their mortgages.
Makes sense. So what's your take on all this? Should people who are thinking about buying a house do it now or wait and see what happens?
Now remember, I'm not a financial advisor, so I can't give you specific advice on what to do with your money. But I think the Bank of Canada's report is a really good resource for understanding the factors that could affect the housing market. So use it to inform your decisions.
Right. Do your research and make the choice that's right for you.
Exactly. Don't just blindly follow what anyone says.
Okay, so we've covered a ton of ground today. Inflation, interest rates, what's happening in other economies, how people are behaving,
Yeah.
even a little glimpse into the future of housing.
Whew. It's a lot to digest.
But it's fascinating stuff. And it shows how complex the economy really is.
It's definitely not boring.
No, not at all. And
Yeah.
it's the Bank of Canada's job to try to navigate all that complexity and steer things in a positive direction.
Exactly. They've got all these different tools they can use to try to make things better for everyone.
And as individuals, we're not just watching from the sidelines. What we do actually matters too.
Absolutely. How we spend, how we save, how we invest. It all adds up and has an impact on the bigger picture. It's
Yeah.
like we're all part of this huge economic ecosystem, and what each of us does affects everyone else.
All right, so I think we've done a pretty good job of laying out like the big picture of what's going on in the economy, all those different
Fritz
factors.
did all the major points for sure.
But before we wrap things up, I want to kind of zoom in a little bit.
Okay, get specific.
Yeah, because I'm imagining someone listening to this deep dive and they're thinking, okay, this is all very interesting, but what does it actually mean for me? Like, how does this stuff affect my day-to-day life? You know what I mean?
Yeah, I totally get it. It's one thing to talk about the economy in these big abstract terms, but it's another thing to figure out how it all connects to our own personal finances, right?
Exactly. So what would you say to that listener? The one who's wondering how to take all this information and actually use it?
Well, the first thing I'd say is knowledge is power. The more you understand how the economy works, the better decisions you can make about your own money. It's like having a roadmap instead of just driving around aimlessly.
So don't just passively listen, but think about how you can actually apply this stuff.
Right. So, for example, let's say you've got some debt, like credit cards or a personal loan. Knowing that interest rates are probably going to stay low for a while, well, that could be a good opportunity to try to refinance that debt and get a lower interest rate.
That's a really good point. What about saving? Does it even make sense to bother saving money right now with interest rates so low?
It's always smart to have some savings, just in case, you know? You never know what life's going to throw at you. But you're right, those traditional savings accounts, they're not exactly paying out big bucks right now.
So what are the options if you want your money to actually grow a little?
Well, that depends. It depends on your personal situation and how much risk you're comfortable with. Some people might think about investing in the stock market. Others might decide to focus on paying down their debt first or building up a bigger emergency fund. There's no one right answer for everyone.
So it's all about finding what works for you.
Exactly. And that's why it's so important to stay informed, to keep learning. The economy is always changing, so you got to stay up to date on what's happening and be ready to adjust your financial plan.
It's like we should definitely be paying attention to what the Bank of Canada is doing, but we shouldn't just blindly follow their lead. We need to think for ourselves, do our own research, and make sure our decisions line up with our own goals and what we're comfortable with.
I couldn't agree more. It's easy to fall into the trap of thinking that someone